Hey, Hobart, I keep hearing about this buy, borrow, die strategy, and I'm curious, how does it work and can it really help me avoid taxes in retirement? James, I love this question, and big shout out to Hickory for coming up with this one because this one's a biggie. You know, that buy, borrow, die strategy, it is one of the best kept secrets in high net worth financial planning, but it's something, quite frankly, that everyday folks can potentially use too, as long as you've got that right guidance. So I want to break it down in plain English so you understand. Step number one, you buy. That means you invest in assets that grow over time. So think like real estate, diversified stock portfolio, even farmland. These are things that go up in value and they help build your net worth. The second step is you borrow against those assets. So when you need money, instead of selling those assets and getting hit with capital gains, you borrow against them. You see, the thing is, banks love lending to folks with appreciating assets because those assets, they act as collateral. Now, here's the key. Loans aren't considered taxable income, so you're getting cash flow without triggering a tax event. Now, third step, I realize this is going to sound dramatic. Hang with me, though. It's to die. You see, when you pass away, your heirs inherit the assets without what's called a step up or with a step up in cost basis. That means any taxes on the gains, poof, largely wiped out. They start fresh, often owing little or nothing in capital gains. So, James, this strategy, it can be really powerful, but it's not without risk. You see, you've got to manage that debt carefully because, again, you are borrowing against assets. There is interest to be paid. So you got to make sure those assets are solid, and you got to work with an advisor who really understands this type of stuff. Also, it's important to know tax laws can and have and will change. So having a flexible financial plan is really key here. Now, you might be thinking, could this work for me? And yes, for a lot of folks, it will work. But again, you got to be working with the right folks. So hopefully this was helpful in giving you a little bit of information. If you've got more questions, always reach out to us or drop a comment in the section below. And make sure that you subscribe and give this video a thumbs up and pass it on if you can. Now, my question for you is, if you could live tax-free in retirement, what would you do with that extra money each year? Would you travel a lot more? Would you help those kids out? Maybe would you buy that mountain cabin? Let me know below. And don't forget to send in your own Hey Hobart question, just like James did.